Hi, this is Trading Bitcoin. I'm here with Tyler and Tone. We're also trading Bitcoin and Nasdaq today. Tyler, how you doing?
I'm doing great, thanks. I wish the markets were doing a little bit better.
Hey Tyler, thanks for joining us.
Yeah, absolutely. This will be fun. I think this is a very important day, uh, but I'd love to hear what you have to say about it.
Yeah, you know what? I've been so busy. Like I still have like real positions on that I really need to manage at this point. But I'm gonna exit tomorrow or Monday, no matter what. Um, yeah, we will cover traditional markets as well. How do you want to start? Anything on your mind we can talk about first, or should we go straight to the charts? What are you thinking?
Well, yeah, there's a couple of things. I've been getting a lot of messages from people that just don't seem to understand um, what happens or what can potentially happen at a very critical juncture in any market, the Bitcoin market, the stock market, the NASDAQ market, the gold market. And what I mean by a critical juncture, just in traditional technical analysis, when you get something like a head and shoulders or a cup and handle or even a trend line, what happens at that point when you're about ready to break through, let's say, a neckline of a head and shoulders or a cup and handle, one of two things can happen. Either you go ahead and you break that neckline, in which case the price will take a very big move, or more importantly, you won't break that neckline. And what happens is a very aggressive move in the opposite direction you were thinking about. Now, think about a trend line, like, for example, the old phase three trend line that was prices bounced 11 times off of it. Every time you come close to a trend line, one of two things is going to happen. You're probably going to bounce off of it in the opposite direction you came down to it. But every once in a while, you will actually break through it. What we're going to talk about today is a very important formation that has occurred in the NASDAQ, which is called a broadening top. And it is happening at a point in time today where the S&P and the Dow both broke down through their 200-day moving averages. And today we also went to new lows on all the biggest averages. Now, I said in an answer to one of the tweets this morning, we are at a very important crossroads in which there's either a very big opportunity to buy this market, meaning the stock market, meaning the NASDAQ stocks, the S&P and the Dow. We might be at a very critical point where this will be one of the best buys you will ever have that could last for a couple of years and go straight up to the moon. On the other hand, and people hate it when economists or technical analysts say, on the other hand, if we go a little bit lower than we are right now today, before we had this turnaround earlier this afternoon, we can go very, very sharply lower, and we might keep going lower for a matter of months or years. So the concept before we get into this is 99% of the time, you're not at a critical juncture. You're following a trend. But when you get to a critical juncture, don't presuppose what's going to happen. Prepare for something big in either direction. And that's what we'll talk about. That's basically, I've got some charts we can look at that talk about that.
All right. So what do we say? Bitcoin or traditional market charts?
Bitcoin.
All
Wait,
right,
should I show the show first?
We'll do Bitcoin. Oh yeah. Stand up. Sort of.
Oh, great.
Can you read it? Okay.
Dinosaur of the day.
Oh yeah, speaking of
Woo!
shirts, I forgot to say it this morning. Bitcoin Zay, thank you for sending the shirts. Thank you for sending these over to me. But if you're watching, because you sent the shirts, please don't put the word Bitcoin anywhere on the packages, because it took hours to get this stuff from the post office. They were not very happy about this. Okay, so But thank you for sending the shirts. We did get them eventually.
Wow.
All right, Bitcoin time.
All right, let's do screen share. Let's go to Bitcoin. All right, and Tyler, feel free to interject at any time you like.
Okay, great.
Your screen share, can you see it on your end?
Yep, I got it.
Excellent. Let me gotta move some stuff out of the way here. Okay, so my weekly chart continues to look more and more bullish while I continue not to believe it. So this is where we are. I will remain in the belief that we are in a bear market until I am proven otherwise. I will not be proven otherwise until we're breaking above 12,000. Now, in all fairness to myself included, I became convinced that we are in a bear market when we finally crossed 13,000 on the way down. So, hey, these are the big time trends. Like, I don't need to, catch the very top. I don't need to catch the very bottom. I just need to understand where we are in a long-term scale. So I remained like throughout this bull trap on a daily chart, as we bounced off of 12,000 and we went all the way back to 17, 18,000, I remained hopeful that new highs are coming. When we came back down to 13,000, all hope was lost. And I became officially bearish somewhere in the $14,000, $13,000 area before the complete collapse going down to 6,500. When we bounced, all the way down to 6,000. When we bounced off 6,000, I was pretty hopeful that this was going to be a sustained rally back to the upside. But when that rally failed and we went back to 6,500, I once again lost all hope that this rally is going to amount to anything. So the only way I turn bullish, there's three ways in which I turn bullish. We go straight up and I turn bullish somewhere in the $17,000, $16,000 range. We get rejected anywhere in the current area, go back down and make a higher low, clearly higher low, above 7,600 or at 7,600, but no lower. And then we start to bounce back from there strong. I can call it. So the lowest place I will ever call a bottom is at 7,600 if we turn around, go back there and bounce off. If we stabilize here for multiple months, and then we're breaking 12,000 with some significant volume, I can turn bullish then. But there's no way I'm turning bullish now. So either I missed the perfect time to buy, which is fine for me personally as a trader. Either I missed it and I'll wait for something, tradable, or we're still in a bear market and this is another bull trap. That's my long-term outlook. Tyler, your views?
Just slightly different than what you just said. I have been short-term bearish, intermediate-term bearish, and long-term bearish. And I was forced to define those, and it's very difficult to define those terms. But in terms of Bitcoin, I define those three. Short-term is days, intermediate-term is weeks, and long-term is months. And that's not very precise, but it seems to fit very well.
I'm sorry, Tyler, months of time or monthly candlesticks?
No, months of time.
Okay, so for me, months of time is weekly candlesticks, weeks of time is daily candlesticks, and short term is anything less than daily candlesticks.
Right. And I don't look at anything really less than daily just because of the way I look at things. So I go daily, being daily meaning days, which can be 5 days, 7 days, 10 days. It can run into weeks, but I'm measuring it on a daily basis. And so all of my technical indicators are basically either 6 hour, 12 hour, or days. When I'm talking about intermediate term, I'm talking about weeks. That means 1 or 2 or 3 weeks, but it can mean 4 or 5, 6 or 7 weeks and run into months. And long term is months, meaning 1 or 2 months, but that can run into years. And depending on if it's a very volatile asset class like Bitcoin or the cryptos, all of those things are foreshortened compared to if you're looking at the way I look at things for other slower asset classes like stocks or bonds or even gold.
Yeah, no, I'm with you, Ty. I'm with you on those. You're actually more bearish Bitcoin than I am.
Well, I was until this morning. I tweeted out that I've gone from neutral bearish to neutral bullish as of the last 7 days of trading, because I was very impressed by its ability to hold above levels I didn't think it would hold. Your red line, basically, that was pretty impressive to me. Then when we began moving up off of your second red line, I became convinced that we've got a chance for a short-term bounce back up between the 97.50 and the 10,000 level. But again, that's my short-term outlook, which is meaningless in the way I look at things, because my intermediate term is still very negative and my long term is very negative. So I think we're on the same page that this little bounce that we're in could develop into something. I don't see it being able to get through 10,100.
For me, when you say can't develop into something, like for me, it can't develop into anything until I see a pullback of significance.
The probabilities are on your side. If you look at 100 examples like what we're looking at, 70% of those examples before going higher will get a pullback.
Right. And here's the thing. I'm sorry, I know I'm interrupting, but
no problem.
This is what I want people to understand, because every single trader that I know of that has absolutely no experience has become bullish in this market. And every trader that I know that has experience has not. Now, it's possible that the inexperienced traders are going to win this battle, because if there's anything we can say about crypto trading, is that the amount of inexperience trading this market is of the levels you probably have never seen before in your life.
That's exactly right. And going back to September, October, November of last year, what happened was that most very strong technical analysts began doubting the bull run somewhere around the $7,500 to $9,000 level. But there were so many people on the other side that were willing to buy in to the whole CME, CBOE hedge fund nonsense,
right?
And that they were able to push the market up. I don't hold out the impossibility that right here, right now, we could move up to 10,100 to 11,100, break through 11,750 and keep on going. But I'd put the probabilities of that at 10 or 20% compared to the probabilities of 70 or 80% that we at least go down and retest. And if we do that, I don't believe the retest holds. Right. I believe we keep dropping.
Right. Like I have no idea what part the retest is actually going to hold. If we go up anymore, if we break 10,000, I would be happy with the retest of the 50-day moving average sitting at approximately $8,000. It would be nice to get all the way down to 76, but now we're below the 50-day moving average, and it creates potentially additional problems. What I want to explain to people that are probably inexperienced is that here's why I need a retest. I don't know how to explain it to inexperienced traders any other way. We have now gone straight up from a $6,500 area that I was 80 to 90% convinced was not going to reverse the prices back to the upside, okay? I expected a full-on breakdown from the $6,500 area to take us down into the 5,000s or potentially lower. Now, that didn't happen, and that's fine. We have literally gone straight up with no more than 2 consecutive days of weakness. If you look at my candles here, right, I had a 9 with 2 red candles, 2 days, And there was one big down day about a week ago that didn't materialize into anything. So as far as I'm concerned, we have gone from 6,500 to almost $10,000 with no significant pullback in the price. And here is why I need that pullback before I will ever turn bullish. And if I do not get this pullback, I will not turn bullish, until we're crossing $20,000 a coin. Because I need to know that all of these people that bought from 6,500 until 2 minutes ago are not going to panic sell the market the moment there is significant weakness in the price. This is why I need to see the pullback, because I need to be sure that the people buying this market are strong hands willing to defend with more money and not leveraged weak hands that are going to panic and accuse me of taking the market down eventually.
Right. Right. I don't think I've ever been called a fudder so many times as in the last 2 weeks. And it's usually by people that say, if I had listened to you, I wouldn't have made all this money. And what I ask them back is, are you talking about making money in the month of April? What about March and February and January and December? Are you telling me that you were out of the market as it dropped from 20,000 down to 6,000, and now you're happy that you've had a run of $3,000 and that's the way you're going to trade? So you need some perspective on, exactly what we're talking about here. If you are simply a proponent of Bitcoin and you are never going to sell it, then there's no reason for you to listen to a technical analyst or a fundamental analyst.
Well, I can play counter advocate to that. I mean, here's the only reason. Like, my technical analysis for the last 3 months, has been telling me that we're going to go lower than 6,500 and potentially to 1,300. So I have been adjusting my, partying habits accordingly, from thinking that Bitcoin is at 20,000 to kind of, when I was in Austin, I refused to pay $250 a night for a hotel room. And I ended up staying at a hostel for the first time in my life because I was scared that Bitcoin is going to fall to 1,300. And I need to not spend too much money right now. And I need to make sure that I'm not forced to sell a bunch of Bitcoin to pay my bills if it does go down. So there is a reason to pay attention to technical analysts for anything other than, to be mentally prepared for what can potentially come.
Yeah, but that's a very unusual combination of skills. Either you got into Bitcoin because somebody told you to get into Bitcoin and you know nothing about analysis, or you know a little bit or maybe a lot about analysis, but you don't really know that much about Bitcoin. You're the rare example of somebody that knows a lot about both of them, so you can look at your life and your ability to hold Bitcoin, even though you know it's going lower, because you know it's going higher eventually, and you can make adjustments in what you do in your life because of that. But that's got to be one out of every 1,000 participants in this market.
And I'm trying to create more people like that. But
right.
But Tyler, hey, so one more thing based on what you said, right? So here's what happened. And obviously, we don't give trading advice or any kind of investing advice on these YouTube channels. But considering this is free advice, it's really hard for anyone to complain as much as they do, but they still do, right? So what I want to explain to people that I went full-blown bearish around this red line at 14,000, okay? Look, I got caught in this bull trap like a lot of people did. I thought, hey, we're back in at secondary highs. The bubble was hard to predict. The hyperwave was hard to predict. And by the way, speaking of hyperwave, we probably won't have time because unfortunately I only have about 25 minutes left. We'll do one of these again. I do want to talk to you. So Tyler, so you consider the month of January, the month mid-December into mid-January to be wave 6, and we're now in a wave 7.
Yes.
Because I can argue that right now we're in a wave 6 and wave 7 is still to come.
But a wave 5 does not take 3 or 4 months to develop. I think a drop from 20.
Well, that's the thing, Ty. If we take the high on January 17th,
right,
and the low on February 6th, sorry, December 17th to February 6th, that's less than 2 months.
Right, but the 20,000 drop down to 11,000 is a percentage drop that is consistent with the average of all the phase 5 drops.
I see. Okay, so you factored in the percentage drop in there. Okay.
Exactly.
Okay, because if you take the 7-week drop from December 20th to February 6th, that's only 6 weeks. The entire month of January, a back week of December, and the front week of February. That's 6 weeks. And that took us, from almost 20K down to 6. So that was way too big of a percentage drop.
It was way too big, and it came all the way down to the phase 3 line.
Got it.
If it hadn't done that, but there's another part to that story, which is what got us up to 20,000. We went up in a month and a half from $6,000 to 20,000. We had a 300%, 200% on top of the principal move in 6 weeks.
Gotcha.
So that was so violent that you could expect a violent retracement.
Okay, got it.
I was not expecting that violent retracement, and I was long as it began. I got out in the 4 weekly candles. This is a weekly chart.
Oh, no, this is the daily chart.
This is a daily chart. I got out in the 5 daily candles dropping from the 20,000 top because of the speed with which it came down and clearly broke the uptrend. And when it got down to that, close to that 50% percentage, I did not buy back in on the bounce up to 17,000. I have stayed out since then and never gotten back in. And still am not in, although I have told some people that I will probably be putting 25% positions in if we get into the trading range of 10.1 to 11.1. And if we get above 11,750, I will probably put another 25% in.
Yeah, it's a little more complicated than that for me. I have no problem getting back into the bullish bandwagon at any price. I just need to see it play out. Like, I need a pullback or a long enough consolidation. Like, I need to know that the buying for the last 4 to 5 weeks was, significant. And these buyers are in it for the long term and not leveraged panic sellers.
Yeah.
And there's no number. If we continue to go straight up, there is absolutely no number that will get me in. Maybe I'll think about it at 12,000. Other than that, I'm gonna wait for new all-time highs. I'm gonna wait for new FOMO. I'm gonna wait for like new people rushing in. I'm gonna wait for my inexperienced friends to call me again, begging for Bitcoin at the worst possible time. Only this time around, it'll probably be wiser. I mean, buying back in near 20,000 is probably going to be smarter than buying back in right now, in my opinion.
I would agree with that. I do think, though, that we will see a lot of things happen on the weekly and the monthly charts, even using your sequential, if we're able to work our way back up through that overhead that I call the valley of death that runs from 10.1 up to about 12 or 13,000. But that depends on how long it takes.
Yeah. So sorry, speaking of sequential, so we're back here. So on the long-term sequential, and Leah is sourcing questions, and we will make a little time for questions. Just a few more words on Bitcoin, and then I do want to talk traditional markets with you for a minute.
Great.
Just like, so here's another thing that get me bullish, right? So I have already committed to missing this entire sequential move. We are on 4 of 9 on a weekly sequential. I am fully committed to missing it all the way to a 9. I will consider a 9 sequential as a potential selling event using weekly candles, and I will watch it. If that 9 sequential gives me a 1 to 4 candle correction, I will then consider going bullish on the back end of the sequential off the countdown.
Yeah.
Like professional traders are supposed to do, by the way. Like a professional trader would wait for a 9, watch the pullback, and trade the countdown.
Yeah, I can't disagree with that at all.
So basically what we're doing is if I back this up and I go to log scale, so here is a move to the 9 from a 1 here the week of April 10th, 2017, where the green 1 took place at about $1,200. And we went straight to a 9 at 3,000. I have no problem missing this move as long as I catch the countdown to 13. So I'm willing to miss 1 to 9 where it topped at 3,000. I would rather short the 3,000 and try to get back in over here somewhere in the $2,000 range and play the countdown to 13, which topped at 7,600. So
Yeah.
I would rather play the 2,000 to 7,000 game than try to be in here getting ready to sell everything at first sign of trouble and be scared.
Well, just one quick comment, and then we can look at the traditional markets. What everybody is hearing are two different views using a number of different technical indicators. When listened to carefully, we are both talking about managing in and out of positions and not being married to any one thing, and knowing that there are 2 or 3 or 4 possibilities that can occur at any moment. And what you do when you're managing risk and managing assets is you're weighing all of that constantly, and you never marry yourself to anything as being a determination that it's got to happen.
Right. So, okay, so let's jump to a traditional market. So I happen to have the S&P up.
Great.
Do you need to look at the NASDAQ, or we can use the S&P as a proxy?
S&P's a good start, but then well, if we could just spend a little time on the NASDAQ. I think the NASDAQ is leading the S&P and the Dow in direction.
I'm not going to argue that. Oh, you with me, Ty?
Yeah, I'm here. Yeah.
Okay. So since I have the S&P up, right, I will do my little analysis of the S&P, and then yeah, the NASDAQ has to be leading because the S&P is even close to a death cross.
Exactly.
Oh, but this is the daily. Were you looking at the weekly before the daily?
Yeah, I'm using weekly. I'm using a 7-week and a 30-week moving average, which is approximately a 50 and a 200-day.
Oh, okay. So yeah, in which case the NASDAQ is way closer to a death cross than the S&P is. So
yeah.
The S&P is not that close to a death cross yet, but all signs are pointing to it. Now, I particularly liked calling this top on a bearish harami along with a 9 combo 13 sequential. Now, I was able to perfectly call the bounce off the 200-day moving average off of the sequential 9 setup. But after that, I did get another 9, but this is the double bottom scenario that troubled me. We were supposed to go straight up to new all-time highs. When we didn't, trouble set in. Now, I am still fundamentally bullish the stock market, but not so much technically anymore. The current candle is a nice reversal candle, once again holding the 200-day moving average on the S&P, but And this is where you and I might differ a little bit, where to me, now this is 1, 2, I'll call this cluster 3, and this is now the 4th time, maybe 4.5, that we've held the 200-day moving average. And that's not good. It's supposed to be held once, maybe twice, and that's it. I'm not liking this right now on the markets from a technical picture.
And I would agree with that. If we just talk Consensio for a second, I use the fact that the short-term moving average began to flatten out back in February. It began to go down around March the 12th, and it is still coming down, even though we had this April move up. And when I see the short-term moving average flattening and turning and going down, one rule is to begin to raise some cash. We've raised about 15% cash on the basis of those moving averages coming closer and closer together. The other thing about that S&P chart, okay, here's the NASDAQ chart. And I believe that we are looking at a 4 on the hyperwave.
Right, so this is the 4. I'm gonna adjust it a little bit. That's our 4. It's barely holding on.
I believe the number is 6,650, and we are not there yet. We're hanging around 7,000. Yeah, it looks like you've got about the same line as I drew in.
I'm gonna adjust it a little bit for accuracy's sake. So here is,
I would draw it. Yeah, that looks pretty good.
I would draw it like that.
That looks pretty good. And so we're close, but this market has led the Dow and the S&P for the last 2 years, and the top 10 stocks in this, 6 of them are in the S&P, and 3 of them are also in the Dow. So because the S&P and the NASDAQ are cap-weighted indexes, it means the bigger the stock in terms of their cap weighting, the more important it is in the index. Now, the other thing that bothers me about this chart, other than hyperwave, is the thing called the broadening top. And the S&P does not have that, and the Dow does not have that. But I will be willing to bet that if the NASDAQ breaks down and breaks, can you throw the...
Yep, I got it.
Throw the moving averages on.
Oh, I was going to compare it. Do you want to compare this to the Dow or to the S&P?
Why don't we do the S&P?
Right. So this is what you mean by broadening top. So let me there. So basically,
exactly.
The NASDAQ made a higher high right here in April, but the S&P made a lower high. Huge divergence.
Exactly. Huge difference. And
now, on the flip side, though, S&P made a lower low on a closing level, and NASDAQ did not.
That's right. The NASDAQ is holding on for dear life. And the way you look at the broadening top is if you go to your 8 and 9, the last 8 and 9 we had on the top, it looks like it's in, yeah, right there. The 8 is a 1 of a broadening top. The 9 is a 2.
No, we're not on the same page here.
Yeah, you were pointing to the right thing. That 8, if you put the number 1 above that 8, that broadening top has 5 numbers to it. 1, 2, 3.
But wouldn't this be 1 like this, that, and that?
No. You need 5 numbers. So the first one is the 8. The second one is the 9.
1, 2, okay, 3.
The 4 is a 3.
4.
There's your
5.
4, and there's your 5.
Got it. I see what you mean. Okay, got it.
The red one. And when you close below that 5, which you did on the next candle, the big down one, that triggers the sell signal. And it says that is the end of the move up that had started years before. Now, what's the percentage probability? It's very high, and it's very rare that you see this, and you don't see it on the Dow, and you don't see it on the S&P. So what we're looking at here is we're looking at the possibility of breaking a phase 4 hyperwave line. If you put the moving averages on here, a 7-week and a 30-week.
Oh, this is, oh yeah, it is the weekly chart. Got it. Okay, let's do that. You said a 7?
A 7-week, which is like 49 days.
And which one?
30-week.
30-week.
Yeah.
Got it. I'm gonna make them darker.
What you see is they're crossing. We're getting a death cross.
Yep, it's getting close.
We're about 30 points away, but the short term is coming down so quickly
right there
that it's going to be impossible to stop it. So now you've got a broadening top, you've got a death cross, you've got phase 4 hyperwave. So am I panicking and selling everything? No. We're in 15% cash, we're in 85% long the market. But what's going to happen to get through all of this things we're talking about is sequentially things will happen. We will get the death cross. We will also be breaking that 30-week or almost 200-day moving average on the NASDAQ very shortly. We came down and we touched it today before reversing. Then below that, you've got a hyperwave. At each one of those points, I would be raising more cash.
Makes sense.
So now that's not the Dow and the S&P. That's just the tech stocks, basically, because the top 9 out of 10 are all tech stocks. But it's a canary in the coal mine type of a thing that when it begins, it can come apart very quickly. Let me take the other side of that. I would fully expect that even if we get a death cross, it won't last long, and we're going to get a strong bounce off of the hyperwave 4 line, and we may very well only be halfway up this 4 line, and we have a year or 2 to go of strong upside action. That's why I started the whole thing by saying when you get to critical junctures, don't draw a conclusion that you know what's going to happen. Be prepared to go either way big time. This is one of the biggest opportunities we've had in 3 or 4 years in the stock market. And it's either going to be wildly up or wildly down. And the only way you're going to be able to tell that is through technical analysis. A fundamental analyst is not going to be able to dig their way through this. They're going to have to watch the price. And
right, and I know I agree with that. And fundamental analysis is a lot about opinion. I mean, I've been bullish the stock market even before the Trump election. And the day I thought Trump might win, I became so bullish the stock market that there is absolutely nothing fundamentally in the world economy that's going to change my mind other than technical analysis as long as Trump is president. Like, I'm expecting the markets to double, if not triple. And if Trump gets reelected, I'm expecting a huge boom for the stock market. And lots of fundamental analysts will disagree with me. They think Trump is bad for the markets. Yet, I don't know, I would think the last year of stock market gain should have proven them wrong, but they continue to think that.
I would agree. I love fundamental analysis. That's how I started out, but I drifted over to the technical side, and I try to use both of them. But I will always fall back on the technical picture.
All right, Ty, we have about 7 minutes left. Leah's been sourcing questions and hit us.
All right, ready.
Let's do it.
It was Belowski, right, Ty, that did the broadening top?
The broadening top was originally Edwards and McGee, and then 25 years later, Wells Wilder Jr., and 5 years after that, my partner and I defined exactly how it worked.
Love it. Okay, first one. Let's go back to the Death Cross. Is it playable for a short? I'll send this to you, Ty.
Absolutely, but in the context that we just talked about it, it is not definitive in itself. And very often you'll get a death cross that then flattens out, and then you get a golden cross weeks or months afterwards and no real damage done. All these other things are very important. The moving averages are very important. The hyperwave phase 4 line is very important. And the action of the Dow and the S&P. The NASDAQ is not going to go in one direction in a big way without the Dow and the S&P doing the same thing. So if they refuse to buckle, and they refuse to give death crosses, and they refuse, which they've already done, to give broadening tops, that gives me some confidence that the overall market might be able to hang on here, regardless of what I'm saying now about the NASDAQ.
Hey, Tyler, so I'm looking at the daily chart of NASDAQ, and the death cross is not that close on a daily chart. It's not looking great, but it's not that close.
Interesting.
You want to pull it up? Because next question I'll throw you.
You can throw am I screen sharing or no?
No.
I'm not, am I?
No.
Okay, hold on. Let me screen share. Give me 1 second. So this throws us a little bit of a wild card here. So I would say, based on the chart I was looking at earlier with Pi, that death cross is totally playable, only because the price is in the vicinity of the cross, which is which is one of my criteria. It would have been nicer if the death cross was also on the hyperwave line, but it's a little bit higher.
Well, we're looking at two different sets of moving averages, though. You're looking at 50 and a 200.
Correct.
On a daily chart.
Correct. So this is the 50 and 200, and they're not that close to a death cross yet. And so to be honest, I would wait. I would not be scared of shorting this market yet. Again, my fundamental side tells me that Trump is still president, though I haven't been paying too much attention to the news. He may not be very soon, since everyone wants to eliminate him from being president through lawsuits or whatever. And but as long as Trump is president, my fundamental picture is I'm bullish the market, and be damned with PE ratios or price to earnings ratios or whatever other metrics there are totally irrelevant. So, well, we'll see what happens. All right.
So stay on it.
What else we got? Okay.
You want to throw up the FTSE?
The what? FTSE?
Yep.
This is my, sure. FTSE, why do we care about Great Britain? I'm kidding, guys. Please don't be mad at me. That's like my second biggest market. The FTSE 100 or the total?
Let's do the 100. Just to analyze regarding, yep.
Oh. Ooh, wow, look at that. They got a 9 right at the top.
Already had a death cross.
It already did. See, this is the death cross that's not playable. This is what I try to explain to people, right? The price needs to be in the vicinity of the death cross, because this death cross, yeah, it was playable. It gave you lower prices, but it didn't last long, and it bounced strong. And it's getting close to a bull cross. I wouldn't touch this right now. I mean, you have a bit of a double top, but it's a lower high. It's above the moving averages. The sequential system giving you 3 red arrows here, telling you to be very cautious. I would either wait for new highs and then go long, or ideally I would wait for a pullback into the golden cross and buy that.
Yeah, that makes sense.
Ty, question to you.
Yeah.
How do you hedge your GBTC position? And it's in relationship, we've spoken about this, but in relationship to the fact that Bitcoin trades 24/7 and traditional markets?
Yeah, you can't hedge it in a retirement account, unfortunately, because you can't use futures options and you can't buy crypto. But in a regular account, if you're buying it in a trading account, you can hedge it with Bitcoin over the weekend. In other words, you can, if you've got $100,000 in GBTC long, you can buy $100,000 worth of either options or Bitcoin short over the weekend to hedge it over the weekend. And that's a fairly inexpensive way of doing it.
Tone, what's going to happen with the next halvening to the markets?
You know what? It is so far away. You really should not be thinking about the next halvening yet. It's like in the Ugly Old Goats articles. We can go to 1,300 or we can go to 30,000, and we can do both of those things this year. And the halving isn't even 2 years away. It's more than 2 years away. So I would not start thinking about the halving or its effects on the market until you're about 9 months away from the halving. And then you have an idea of what price ranges you may have to deal with during the halving. Because I don't even know what price ranges we'll be talking about a year from now, and the halving is more than 2 years away.
Last question, and this was a tip from Rich. Tone, would you say that the most organic of the people charts that you've ever analyzed, Bitcoin being that, specifically, okay, if it's mostly retail over institutional, maybe people are not willing to sell beneath 8,800?
No, that's not, it's a weird question. Okay, so lots of people will be willing to sell under 8,800, okay? There is now a decent amount of people that are earning their living in Bitcoin, and they will sell at any price because they have to pay their bills. I guess you can call me one of those people. My bigger problem, my bigger worry is this. I don't like all of the buying that took place in the $6,000 area. I don't know how strong that buying is. And that buying may be speculative, and it's going to sell at 7,000 and drive the price lower, thinking they can buy it back at lower prices. And don't underestimate all of these people that are buying hundreds of thousands of Bitcoin in OTC trading, because now they have the Bitcoin to drop the price down, and all they have to do is use 10% of their supply to drop that they bought in OTC trading to crash the price on exchanges in order to double their positions at significantly lower prices on those same set exchanges.
All right, gentlemen, we are 2 minutes before your next interview.
Yes.
Sorry, guys. Thanks, guys.
We wish we can make this last a little bit longer, but we will be back. I'll probably try to do more of these shows with Ty. And I'm just going to go back to screen share since this is a traditional trading Bitcoin. And hold on, there it is. And I just want to, again, I forgot my usual disclaimer about learning how to trade. I want people to learn how to trade. I will be making videos, and that's what that new initiative is about. I don't have the website, the one that involves Peter Brandt and Haijin Lee and other traders. The Bitcoin Live website is a subscription website. I will be making educational videos on that. I'll bring you more info there. And of course, if you like my work and you want to support my work, please check out the affiliates and referral section of the website, where there are lots of discount codes and other affiliate links. All right. Thanks for coming on, Ty. I know it was last minute. And
no problem. We have plenty of time.
We'll do more of these. Again, I still watch Hyperwave. So please put out more episodes of Hyperwave because that's probably the only podcast I find time for. Usually on airplanes, I download the YouTube shows and I watch them while I fly.
Thank you, everybody, for watching. Thanks, Ty.
Thank
Bye,
you.
guys.